Hey guys, Credit Shifu here. So Donald Trump has now been elected the President of the United States. The Donald has landed. So what does that mean for your money? Well, from the way the market behaved in the lead up to the election, everyone thought a Trump victory would spell a disaster. Here is the Dow Jones Industrial Average over the last few weeks. Here is where the news broke of the FBI reopening the investigation into Hillary Clinton's emails. You can see the market go down after that. Then on November 6th, which was on a weekend between these two dates, the FBI announced they would not be pressing charges for the second time. And what do you know? On Monday morning, the market opened significantly higher. It really seemed big business and investor confidence was behind a Clinton win. On election day, things looked optimistic for Hillary and the market rose again. But as we all know, she didn't win. The underdog blasted through, making key gains in America's heartland and won the presidency. On the morning after the election, markets dropped. Economist Paul Krugman tried to claim the markets would never recover. What a jerk. He probably had a bet on the outcome and wanted to see it through. Although I was more optimistic about the long term, I for one did assume that people would scramble to sell off stocks and buy gold. I'd positioned my portfolio accordingly, sold off some stocks in advance that I thought would be at risk if Trump won, and had some positions in the gold market. I hoped to rebuy the shares I sold off at a lower price if Trump won. However, I didn't let go of all my stocks. Here's an ETF I held onto, and look at the result. Never bet all your assets on one outcome. So the markets recovered within a couple of hours and the Dow Jones blasted to new heights, having its biggest weekly gains since December. One currency trader I talked to said it was because of Trump's acceptance speech.
I pledge to every citizen of our land that I will be president for all Americans.
He kind of confirmed that he wasn't Hitler after all. It's almost like companies and investors stopped, thought for a moment and said, well, this wasn't the outcome we put our money behind, and they put a lot of money up for Hillary. But President-elect Trump seems okay now, and he wants to freaking halve the amount of corporate tax we pay. Let's get behind that. Arguably the greatest investor in the world, Warren Buffett, echoed that view.
So all of these predictions that the market was going to tank under President Trump?
They're silly.
Buffett says he hasn't changed his business plan at all.
We were buying and selling certain stocks a week ago, and I thought Hillary would be like we're buying and selling the same stocks today. And
really?
we did it on Wednesday. Yeah, we did it on Wednesday the day after, and we're buying them in the same quantities, we're selling them in the same quantities. We haven't changed anything.
So what can we learn? Businesses and markets adapt to new political conditions. In the long run, markets will always go up. They also go up when Republicans get control of the House and Senate, which is also what just happened. Even though Trump may have to deal with some sort of a recession during his presidency, especially if he serves 8 years, Buffett does not believe that the policies that Trump will manage to get through the House and Senate will be the cause of that recession. So how should you invest for a Trump presidency? Well, markets hate uncertainty. So now that the uncertainty of who will become the next president is over, I believe the stock market will continue to rise moderately. We saw this after Brexit. After the initial shock, markets returned to normal. US pharmaceutical stocks are rallying after Trump's victory because of his pledge to repeal and replace Obamacare. But don't jump in too soon. There may be more instability in the pharmaceutical industry as Trump confirms more details about his healthcare plan. Trump has pledged infrastructure spending and lifting regulations on oil and gas drilling. So these could all be sectors to buy into now before we start seeing concrete policies rolled out and everyone wants to buy in, pushing up the price. Don't forget to always spread your risk across multiple sectors of the market and don't just listen to me. There are many experts out there who've written great articles analyzing the situation. Just be careful not to get your news from those extreme pro-Clinton news media like the New York Times and CNN, etc. Same goes for media who support Trump like Breitbart. The Financial Times and Bloomberg, etc. are much better choices. They give you just the financial side without taking such a strong opinion on politics. As always, I'm the Credit Shifu. Thanks for watching. Please subscribe for more videos like this every week.